All right, we're going early today, but we're going to start in like 8 minutes. How about that? 7.5 minutes. Let me get you some music to soothe your soul. I got to find some royalty-free stuff. Okay, 7 minutes, 6 minutes, then we'll go. ADP, baby! ADP! I guess I can just go. I was gonna make more coffee. I think I'm good. Yeah, I guess we'll go. Now I got to find the music. Happens to me every time. There we go. All right, good morning. We're about 8 minutes away from another dumb prediction, the ADP Employment Report. Welcome to Forex.Today, the YouTube community of more than 21,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble. Focus on the long term. Never risk money you cannot afford to lose. Hey, my name is Wayne. Wow, 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 wow. That's it. Now I got a thumbnail. That's all we need, right? Let's get on with it. ADP. We're expecting $1.50. Last one was $1.50. We're expecting $1.48. Previous to that was 152. So here's how we look at it, right? Like it's hard because of the skew here. This really throws things off. But we went 89, 113, 103. So these were low. And then what? They got big. 164, 140, 184, 192. Oh my God. Oh my God. So when you put it into context, how good or bad is 152? Well, a year ago, right, we were closer to 100. And the Fed really is looking for this to come down because they want to see a cooling economy, not a collapsing economy. But $1.50 is pretty high. And with a 2.8 GDP, I wouldn't be shocked if this comes out $1.60. So in 6 minutes, we got a new number, right? Okay. Right? So amazing. Yeah, Trucking Mogul, I cover all that at QuantBox. I said in very, very plain English, very, very quickly, that analysts are debating what's going to happen. And I'm like, we've known for months and months and months, Trucking Mogul, that in this quarter, the Bank of Japan was going to raise by 0.15. I said it matter-of-factly yesterday. Not 0.1, not 0.25, 0.15. I mean, I know because the Bank of Japan has already told us. And yet people on TV and in the newspapers debate what the Bank of Japan might do. And I'm like, dude, we've known this as a fact for months. And I have it graphed out and everything. So, yeah, done. Easy peasy. So anyways, we're 5 minutes away from that. When we look at TradeRs, TradeRs says there's no reliable, repeatable pattern, whether it comes out as expected, better than expected, worse than expected. It's volatile. And really what happens is, this Fed meeting probably overtakes ADP or even just NFP at the end of the week, which is here, overtakes and overshadows ADP. But the other thing is, 15 years ago, I had the data analyzed, and I know there's no positive or negative correlation between ADP and NFP. I know that because I heard an expert on TV saying, well, ADP was good, therefore NFP is going to be good. And I asked Kurt Worley, the late and great coach and someone who had a master's degree in applied statistics, I said, Kurt, can you prove that's true or not true? And he went and pulled all the data and analyzed it going back years. And he's like, there's no positive correlation. There's no negative correlation. So I know the expert on TV totally believed that ADP predicted NFP. But I also know it's not true. So maybe that's why TradeRs doesn't see it. So it's like the Fed is what matters. Now, speaking about the Fed, today at 1:45, we are going to meet. Everybody's going to meet over here at the very, very first live stream at TradeRs. Okay? And we're at 2 o'clock. we're going to get the interest rate announcement at 2:30. We're going to get the press conference. So make sure you visit the page, click the link, click subscribe, click notifications on, and click the thumbs up button. And I'll see you. Okay? I'll see you there. One last thing. Just want to point out Trader's Way, as I do absolutely every day, because I think it's important. If you don't use Trader's Way or an ECN at all, then your brokerage, think of that. If you're not using an ECN like Trader's Way, your brokerage makes money when you lose money. Their whole business model would be based on you losing all your money. That would benefit them greatly. If you think that sucks like I do, you need an ECN. There's not many ECNs, but the one I recommend is Trader's Way. It's just that simple. Okay? Imagine you fell off your bike and your mom and dad laughed at you. What a loser! You'd be a serial killer. Yeah. The same thing is your broker laughing at you when you lose money. All right, so we got this ADP coming out, and let's see what's what. About 90 seconds, I think. Maybe just 1 minute. I guess 1 minute and 53 seconds. If you're going to do it, be accurate, right? No follow-through yesterday on our news. Could be time of the year. We'll probably do a dollar pair, huh? Okay. If we look at, where's my pound trade? Let's see. Where is this? So I now have almost exactly 1,000 pips profit. Nice little scalp. No joke, that was a scalp. If you don't know how to scalp 1,000 pips, join Investor Bootcamp.
Now to look out for ADP National Employment for July, expected at 150,000, which is the same as the prior. And the report was looking out for median change in annual pay, with job shares at last time came out 4.9% year over year, and job changes at 7.7%.
Oh, what? What the hell is that? Yeah, I'm testing something. Testing something. Wouldn't that be cool if that was integrated into the new TradeR's platform? You just click a button 24 hours a day. I'm not promising. I'm not saying. I'm just saying.
10 seconds.
I'm so excited. It's going to be 161.
122,000.
Oh, 122! It's good.
And the prior has been revised higher to 155,000.
That's a good number.
150,000. Just looking at the data, job shares at 4.8%. It's like beneath the prior 4.9%. Meanwhile, job changes at 7.2%. Also beneath the prior 7.7%.
All right, so that allows for the Fed to cut. That would be risk on, that would be dollar weakness. And people are loving it because it's right before the FOMC later today, right? You sure know what I'm talking about? And by the way, now that I'm just getting used to the news squawk, I should be able to do things like this a little faster. Oops, and it didn't do it. Hang on. And thank you for Denise. Denise, you popped that up fast. Not only did you get the news fast, you copied it and pasted it fast. Bravo, well played. Let's see, I was trying to get you more details. What is this? Can hide it? No, expand it. I'm trying to copy it. And then I would go to here. See, look, it takes me 2 minutes. It still won't do it. What is it doing? It won't copy it. Sorry. It says I can copy it, but maybe somehow they're blocking it. So I go copy, and then I'll go Control C, Control C, 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 C. I definitely have done it. Although I don't think it was highlighted. Let me do it again. Oh, yeah, it's fighting me. Sorry, guys. Control C, 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 and then I'll right-click it and highlight copy. So I've definitely done it. Then I go to YouTube. Come on, trying to give you more data. Paste. Won't do it. No. That's a bummer. No, it just won't. There's something blocking my ability to copy. But I was trying to get you more data. So let me just spew it then. With wage growth abating. Okay, that's good. Wages coming down. We have that in Quant Box. We have those numbers. The labor market is playing along with the Fed's efforts to slow inflation. Adding, and this is ADP talking, if inflation goes back up, it won't be because of labor. No, that's good. So wage growth is pointing down, and we track that at Quant Box. Yeah. Modest upside. Okay. Anyways. So the reaction to the news so far in the first 3 minutes, upside in treasuries and equity futures. So with the headline coming in below consensus, 122, not 150, and the annual pay measures coming in cooler. See, I probably would have missed that. But wages coming down is also a very good thing for the FOMC today. And they'll talk about it because the meeting started yesterday, but this is data. They'll probably, they'll look at it and say, ooh, wages down, the rate of growth down. That could be pretty good. Okay. All right. So you would do something like this. Is typical. Okay. And we just hit the 50%. Yeah. All right. Yeah, interesting, huh? Okay, but we also know in context, 122 isn't amazing. So let me bring this back. 122 isn't amazing. I think I need to, will it refresh without me refreshing? Hang on. I suppose it doesn't matter. Now I have to go all the way back. Let me just refresh. In context of the past, let me pull it up here, 122, and then zip back. You have to scroll back up. Okay. 122. 122. This is lower. This is lower. This is higher. This is lower. So, Okay, it's an okay number, but it's not below 100. Right? Oh, right on, David. Yeah. David did involve 15-1. Not bad, huh? But yeah, in the day trading group, we look at the ends every day. None of this is surprising, Canadian GDP coming out in a little bit. Once again, Traders has analyzed the good, the bad, and the ugly of Canadian GDP going back years. And even though it's important, there's no reliable pattern, at least not in the major pairs. Now, maybe, but you see, it would notice it in CAD dollar, even if it was only CAD dollar, or sorry, dollar CAD. It would show us. It doesn't see a reliable pattern, but it's definitely tradable. And we could look at that too if you want. If you want to. I don't look at month over month. Year over year. Now look at this. Year over year is 0.8. That's what you would expect for a quarter. Less than 1% for a year? What? Canada's in a serious world of hurt. So yesterday in the day trading group, I downloaded data from the Bank of Canada, and we specifically found some dire concerns, like slowing growth, and the data suggested it's not going to pick up anytime soon. Confidence is down, wages are down, spending is down, inventories are up. And yet, despite all of that, or let's say because of all of that, productivity is low, as I just showed you. But despite all of that, inflation is high. It's like a stagflation type thing. It's ugly. It's nasty. And yeah, and when you see the Canadian dollar weak, there you go, by the way. We just fulfilled that scalp pattern. It makes total sense. Okay, but you have to read the data. Yeah, that's the thing, right? If you read the data, there's a lot of really good information in this data. Surprisingly informative. You might say, well, Wayne, I don't really have the time or the inclination. I don't really know how to interpret all this economic data. It's just numbers and gobbledygook to me. Well, I have a degree in economics. So, I found one sentence in one of the statements, and then I drew a graph to explain it. And a detailed graph. And I'm like, this is what they're talking about here. And you have this, you have potential GDP, you have actual GDP, you have a productivity gap, and, and I drew it all out and put it into context. And suddenly you're like, oh, I get it. That makes total sense. And I'm like, I know, right? And so for your small, sustainable trading business, you should have a Harvard economist on your staff. I charge $79 a month. Oh my God. Dude, yeah. You should. Oh, wait. No, we're talking about swing trading. So in that case, no, it costs $99 a month. Yeah. Yeah. Oh, well, forget it then, right? Just so funny. Yeah, that's pretty cheap to have a professional economist on your team. So if I pop up yesterday's video, this is us yesterday. Isn't that cool? Cool. So let's just get on with it and let's roll up our sleeves and do the dirty work that other people are incapable or unwilling to do. Oh, snap. The first one is we got to do manufacturing PMI out of Europe. So let me pull up that data from is down. That's not good. It's taking longer to find work. That's not good. And there's still too much inventory. So it's a problem, right? So here it is. Here are these, econ geeks. Okay? Which means excess supply has increased. So can I bring that back? We'll go back. Yeah. So this is excess supply. See, I just talked about that earlier, and then I bring it back up, right? So you're like, okay. The economy's potential output is GDP, is still growing faster than GDP. So there's potential, and GDP for them is like this. It's at 1.5 actual GDP. Okay, 1.5. Remember, they're expecting 0.8. Potential's probably about 2. So we know we're in here. Or we're in here, it's falling and collapsing. So it's either below potential there or below potential and rising. And they're cutting, but it's a weird thing, they're normalizing. So they're going to cut and pause. The United States is going to cut and leave it at 4, and we used to be at 0, so 4 is still fairly high from what most people are used to now. This is called a productivity gap. Like this is from one sentence in one report. This is what we do every week. Okay? Yeah. Redonkulous. Okay, now we just hit the 2618. Nice, right? You guys having fun? Okay, this is the technique I've been using for event trading for 20 years. It's well documented at FX Street, and I'm sure I've covered it. Well, definitely hundreds of times. Cool. Amazing how a 2618 would be important, huh? Yeah. Well, that could be true, shakalaka boom, 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 but not likely today or this week. So, okay, so that scalp's done. Okay, great. Let's take a look at oil. Okay. Now we got to do this. All right. So technically, we've double bottomed, and we're attempting to make a higher high. So we have a 4% move now. 4% is a big day. Hang on, I'm trying to, maybe that's a pivot. Just trying to delete. Okay, these are pivots. That I can get. Can I get that? No, it won't let me. Trying to get to that little box in there. No. Anyways, I guess what we could do now is the assumption. There could be two assumptions if you're making a bull case. Maybe three. Okay. This is a double bottom. Let's do it in bright pink. Okay. This is a double bottom. We definitely respected that. I've already highlighted this a long time ago. So the next trade, if it produces it, we don't know, is higher high. Soon as that happens, I switch these over to green. And we end up looking for something like this. The second thing, okay, and this goes to Shakalaka, is that the reason this reversed is not the double bottom, but geopolitical risk. And so even though you're like, oops, I'm looking at the wrong one. Sorry. Thanks for pointing that out, fellas. All right. I thought I clicked on oil. I thought I clicked on this one. All right. Well, that's different then. I was trying to read into the pattern. Let's do this differently. All right. That makes more sense. All right. Here's the support. We've definitely broken it on the 4-hour. We are approaching 2 standard deviations above the mean. The next move is likely down and then up. The big thing here is, why did it flip from so bearish to suddenly bullish? That's the geopolitical risk. Okay. It's not inventory levels. And it wasn't like, normally you'd get like a smoking hot US GDP, which would lead towards things like maybe increase in demand for energy. It wasn't any of this. So suddenly, boom. Okay. So the thought process, Shakalaka, is that how do we just say, if things escalate in the Middle East, let's just do it simply. If things escalate in the Middle East, then it's not good for oil demand, oil supply, but it does potentially threaten oil supply. And if demand is the same and supply is diminished, then prices go up. Oh yeah, CAD killing it, huh? 0.2. Wowzer, huh? Not that great.
And just looking a bit further into quarterly funding, as mentioned in the rundown, we're looking for any mention of debt ceiling. Does just note in there that the committee also discussed the potential impact of debt ceiling constraints on the Treasury's issuance strategy in fiscal year 2025, especially limits the Treasury's flexibility and the likelihood of increased costs to the taxpayer. It does note the periodic occurrence of debt ceiling episodes does drive elevated uncertainty in funding costs.
Would you like this embedded into traders?
And further here, in the report on buybacks, it does note that the limited size and already liquid market conditions meant that it was difficult to ascertain the full impact of the program.
I don't like the fake accent, though. Can you imagine having something like this? 24 hours a day, you can just, but you can turn it on and turn it off. If you don't want it, you can just turn it off. Cool. The interesting thing is it tells you when the next event is happening. So there's another one in 23 minutes and 50 seconds. Meanwhile, they're watching headlines, they're watching all the different markets. Yeah. Yen. Anything with the yen on, you sell it. We've been doing that for weeks now. Anything with the yen, you should be selling. It's pretty straightforward. You have to also understand, we knew the Bank of Japan was raising interest rates. We have it graphed and plotted out. Like, it's so simple and so basic. Like, if we plotted it out 3 or 4 months ago, I would argue it wasn't a surprise. So let's see if I can go back. I'll just show you guys. I'm going to show you how much you should have trade hours. Now, if I can go back, because I don't have that page actually live for you, so I can't pull it up directly, I don't think. I have to get out of sonars. I have to get out of radars. So we've already done oil analysis. We've already done it. I mean, this is what is important. There we go. So let me just show you, like, right, it's like one of these things.
Just make you aware of monetary comments here from Israel's foreign minister does note the only way to prevent all-out war with Hezbollah is immediate implementation of UN Resolution 171.
Cool, see? All right, let me turn that guy off. All right, it's like one of these things. If you're just now aware of the Bank of Japan and yen strength, you're woefully prepared to compete in this market. And I don't say that to be insulting. I say it as a wake-up call. Okay? And you're just not competitive. And so we've had this plotted out for months. And here it is, an increase from 0.1 to 0.25, which is a 0.15 increase. This wasn't plotted today after the news. We've had this plotted for months. And there isn't going to be another rate hike until next year. It's already plotted. We already know this. So, right, look, I have it plotted out here. The yen is going to get strong while most other things are generally going to get weak. Now, the US dollar is a little different because it's a reserve currency, but like relative to everything. So it's like, don't sell Swiss yen. You could sell Aussie yen, but you're better off selling Kiwi yen or Euro yen. Okay, I don't know where this comes from. It's so funny. CAD yen, pound yen, that kind of stuff. But we have it all plotted out, graphed. Here's the interest rate forecast all the way out into the second half of 2025. Right, interest rates are going to go up, inflation's coming down, and then you could track how are their expectations. Now, this isn't ours. This is what the Bank of Japan is telling the world. The thing is, the world doesn't listen because they don't do the work. I'm telling you, even the experts debate this stuff on television, which tells me they don't have a frickin' clue. The Bank of Japan has already told us their expectation. This is the bank telling us. Now, we can go a little further and say, well, okay, Bank of Japan in the fourth quarter expects inflation to be at 2.4. So if it's 2.9, okay, we might sense some hesitation there, right? Or if it's lower than that, we could talk about it. But we can do comparative analysis of expectations from the past into the actual of the now. But of course, every time they do a meeting, this gets updated. You're like, all this gets updated every time the Bank of Japan meets? Yeah, so we have to have connection to the data through an API. So we're pulling it from the Bank of Japan. And like, you don't have this? Oh my God. So you're like, Wayne, how do you make 1,000 pips on a scalp. Oh, I know shit. Right? Yeah, I know some shit. And it's good. It's good shit. I know some stuff. Okay? Yeah. Look at that. Nice. Well, that's how you do it. You just have to be 1% smarter than everybody else you're competing against. So this is why I'm pulling everything together at TradeHorse. Performance coaching, video training, fundamental analysis, and technical analysis. It's just like, if you're going to compete in this industry, you just have to be at least 1% smarter than your competition. And right now, if you're rolling in, you're like, why is the yen strong? Why did the Bank of Japan raise interest rates? I'm like, dude, you didn't know that 3 months ago? You're behind. Yeah. We're just going to steamroll over you. Yeah. Another weird way to think of it is, if it's a zero-sum game, you're going to transfer your wealth to people who know more. Yeah. That goes straight into my college savings fund for my children. I need $400,000 next year to send my children to university to get a degree. $400,000. So I better buy some frickin' yen, y'all, as they say here in Georgia, right? Yeah. Yeah. But you need to know this. And then here's the other thing, this is so funny. This is my projected high for the pound yen that I gave in January. That's insanity. Yeah, that is insanity. I'm always surprised how accurate the tools that we use are. I'm always surprised. That's incredible. But I did tell you in January, so 7 months in advance. Cool. Down, right? Look at this. Do you remember last week? Does anybody here remember last week? Maybe it was in the day trading group. I had this trapped, and I had a big circle right here for selling. Can anybody confirm that we did that? Yep, upper bounds between the moving averages. Okay. Anybody? Yep. Confirmed. Yeah. Okay. You should be short here. You should be short here. You could be short here, but that's bold. I'm old, but I'm not that bold, said Pitbull. Maybe you kids, right? Maybe you kids took that shot. It's doable. I would understand. But here's another one, you must be on this one. You must be on this one. You probably should be on this one. Yeah. But we see back here, I'll tell you what went on here. Okay. We weren't sure. Oops, nice. We weren't sure. I'll use my arrow tool. We weren't sure if we were going to test this. It was plausible. Unseasonal and all that, but we were, pushing back against the central bank. Okay, because a lot of this started central bank intervention. So, anyways. So then what happened was, so it dropped, it came up, we weren't so sure, lower low. And at that point, I said, that's it. That's it, we know. So I had an X here. I had the X there when we were still sort of way up in here. So we didn't know if it was going to go like this. We didn't know if it was going to go like this. But I had my line in the sand, so I marked it with an X. I got this not from the 4-hour chart, from the daily. So I went to the daily. This is where the 21 was at that time when we were still up here. And I drew my line, and then we went into the 4-hour. I drew my line. Okay, there it is. And so there could be some up, right? Could be a little hop left, and we can re-challenge it. Totally could happen. Lower to this mouse of mine. Once we got the lower low, I mean, that's it. Done and dusted. So it made the lower low, retested, confirmed it again, made a lower low, retested. I sold it off the 21 EMA, off the retest of the lower low, lower high. And we're done. That's it. And I did it on, I think eventually, I ended up doing this on a 5-minute chart. And now it's 1,000 pips. Oh, where'd you go? Where's home now? Relocated. Yeah. Boom, shalaka-laka. Cool, right? Do you guys love trading and investing? I love this stuff. I am so happy to have done this for 20 years. I liked being a VC, honestly. And I would suspect that 20 years later, I still would have liked it. I really enjoyed that. It was in one way of looking at it, it was high pace. It was very high pace. But at the other time, while doing it, though, there was sort of how do you be fast-paced and relaxed at the same time? When I'm thinking about reviewing someone's prototype and thinking about it, why do they use this hinge? Why do they do it this way? Is this patent really protecting this? Is this intellectual property strong? What kind of manufacturing changes could we make? How would you box it? How would you ship it? Who would be interested in licensing this product? What kind of, what has the entrepreneur tried? And then you pick them up on the phone and I'm like, hey man, I've been thinking about your product here. Have you thought about this? And he's like, oh yeah, I thought about it. So I did this and I did that and I learned this and I learned that. I'm like, oh yeah, those are good points. There's something like, I like that. It's like I enjoyed my time at Harvard, even though it was so unbelievably difficult. But I like being absorbed in concentration and focus. I like being in the pocket, in the zone. And so being a VC, being in the zone was constant because I really had to think about stuff. And then I had 2 assistants. So one of my assistants that managed my calendar, she'd swing by and she's like, "Hey Wayne, don't forget about your 3 o'clock." I'm like, "Oh man, I got a 3 o'clock. That's right." So you got to turn that brain off, and then you open up the file and you go back and you start looking at that deal that you have in the works, and then you call your marketing assistant. So I had a marketing assistant. I called them up and I'm like, "Hey, I need my tear sheet on this product. I need to know all the marketing details." So they bring that up and you're just looking at it, reviewing it. And okay, so we have a market size analysis and we have a competitive analysis. And then I could talk about that with the owner, the entrepreneur on the phone. I'm like, okay, well, we did these market research, and boy, just being in the pocket like that, loved it. And I cruise. Right? I cruise like that under stress. I cruise like, I got this, man. I like it. I like the level of stress. And, I'm sure I could still be doing it. And Forex is different. You have to be in the pocket all the time, which I like. And this idea, like, it's competitive. Today whether you were competitive or not competitive. As a VC, you had to wait 10 years. I don't like that part. 10 hours is better than 10 years to know if you're right. So in this case, like, I need to do better analysis. I have to do more analysis. I have on the charts. I have to have a game plan. I need to know my targets. So I might be watching 10 things, even though there's 100 things you could be looking at. I need to know the 10 things that are most likely to make me money today, and I need to know why they're the best 10 things that might make me money today. I need to know what data to place weight on, and I need to know every so often when you need to ignore that, like on oil. You can look at all the fundamentals you want and all the technicals you want. Everything's changed in the last 12 hours. And I need to know that, and then I need to know what to override and then how to engage, right? And so like this flexibility, but yet you have to know everything in the world. And then as I learned over the 20 years, I thought amateurs were the dumb money, and I was told the institutional hedge fund managers and stuff were the smart money and that they know everything. And I've been to onto the trading floor, and I've seen floor traders trade, and I walked out of there knowing that I could compete. I'm like, they're not that great. I thought they were great. I thought they knew 10 times, maybe 100 times more than me. No, they don't. I can compete with these guys all day, every day. And then as I learn more and more about what hedge funds are doing, and these guys are trading billions of dollars, and they drive to work in a Bentley, and they take private jets on vacation with their wife and kids. So they must be smarter than me. And no, they're not. This is what I've learned over 20 years. No, they are not. And it's not that I'm a genius. It's like they're not geniuses. You can compete. But if you're like, Wayne, I didn't know the Bank of Japan was going to raise interest rates. Wayne, I don't know why the yen is strong. You're not competing. You're the monkey in the middle. I mean, you just don't know. And so the decision-making process that you do after that, now you know you don't know. So you have a choice. Okay? It's time or money. Which one is more scarce to you? If you don't have any money, okay, great. Take the time to learn. Simple enough. Now, it might take you years. It took me years to learn these fundamentals. But you don't have any money, so your time is cheap. Your money is expensive. So you make a decision right here, right now. I need to learn all of this stuff. Yes, you do. Central banking policy, macroeconomics, behavioral finance. You can get online degrees for free now. Like, I don't care if it takes you 5 years to get an economics degree. But you can do it for free. So if it only helps you improve your decision-making process by 10%, dude, it's free. Okay? You don't have any money, but your time is cheap. Let's face it. So and you can get the degree for cheap. It only takes you 5 years, but yeah, you don't have any money, so your time is cheap. So yeah, spend 5 years and you'll be 10% better. Meanwhile, learn how to do technical analysis and, attend all these live streams and pick up all these gems. Maybe that makes you 10% smarter in your decision-making process. But the thing is, what I'm saying is 10% here, 10% there, you're becoming more and more and more competitive. And suddenly your time is worth more because you're making more money. I would do whatever it takes. I'm insane when it comes to I will do whatever it takes. There's something wrong with me. Something very, very wrong with me. Once I know I don't know, that's it. I'm going to conquer. Okay? So don't come at me and Wayne, I don't know how to do macroeconomics. And I don't have $88. Yeah, well, Jordan, I spent over $100,000 getting educated at Harvard in my 40s. I didn't need it. I was already rich. I wanted to be a role model to my young children who were just starting to do homework at school. And I knew a lot about macroeconomics, but I didn't have a degree in economics. So I'm like, I'm going to go to Harvard for 5 years in the middle of my 40s. I lived on campus, bro. Okay? Yeah. That's insane. Yeah, whatever it takes. You know, on the fun side, I remember I was talking to a potential client, okay? A potential client that wanted to invest. And we're on the phone, and I was in this house, but I think I just moved, so this had to be almost 10 years ago. Anyways, we have this great conversation. He was referred by a friend. I think it was our second or third conversation, and he's like, I'd like to put money in. So what is the next step? And I said, well, the issue is I don't know you personally, and I don't work with people that I don't know personally. And he's like, oh, okay. So what do we do then? And I'm like, well, we should have lunch. And he's like, okay, great. So when's the next time you're going to be in Dubai? And I said, I'll be there tomorrow. He's like, what? I said, it's noon here. I think there's a flight out at 9 a.m. or something like that, or 9 p.m. or whatever it was. I forget. But anyways, I'm like, yeah, I'm going to hang up the phone. I'm going to book an airplane ticket. It's 13 hours to get there. So I'll see you tomorrow. And I said, I want this to be casual though. So let's meet at Ferrari World. It's halfway to Abu Dhabi. And he's like, yeah, that sounds cool. He's like, I'll pick you up at the airport. I'm like, that's sweet. Cool. Saves us time. So I literally hung up the phone, drove to the airport, got on a plane, flew to Dubai, got off the plane, got in the car, drove an hour to Ferrari World, went in, had lunch, looked at the Ferraris with the client, and then I looked him in the eye and shook his hand, and I said, now we know each other. We've been friends ever since, 10 years later. I talked to him Saturday. Not this Saturday, previous Saturday. So I talked to him 10 days ago. I met him, right? So I flew to Dubai, drove to halfway to Abu Dhabi, did the Ferrari World thing, had lunch, shook his hand. He said yes. We got back in the car. He dropped me off. And get this, I got back on the same airplane. It hadn't left yet, and sat down in the same seat and then flew 13 hours home. I think it's even 15 hours home because you're flying against the wind. So is that insane? Yeah. Whatever it takes, Jordan? Yeah. And that's how you do business. Well, that's how I do business. And so when I get a client, I make a lifelong friend because I'll do whatever it takes. And they know that. That's my rep on the street. Like, this guy is insane, but I like him. Yeah. So, but the thing is, do you approach life like that? Are you approaching your trading like that? Or do you see this as competitiveness or a video game? Okay. You're right. That kind of stuff, right? McKenna says, yeah, well done. You did university after work. You know how difficult it is to work. Yeah. Yeah. Dude. Yeah. Harvard was not easy. Keep in mind, I was a full-time student. Yeah, I did a bachelor's degree and a master's degree in 5 years. Dude, even just that. But Harvard, some of the classes were so difficult, it was kind of stupid. But I graduated both degrees as an A student, and they canceled the program because it was too hard. I beat 99% of the applicants to get accepted. Like, life is competitive. It's right. Now you can chill and you're like, I'd rather relax. I don't think Forex is a relaxing gig. I think you should look into librarian studies or something. Maybe work at a coffee shop, but all that sucks, right? So really, every day you have to be more prepared and more precise and know when to let it run farther than all the other people. That's simple. Right? Just that simple. Cool. So, how about this? What if you had 100 hours of training videos and more being added every day? Not every day, but constantly. Okay? You had a community in which you can interact with all the other traders in the community. You can ask questions. We can do special events. We can do challenges. We can do fun things. We can do working things. We can do live streams together. We can do book club. We can do movie night. All kinds of stuff. And you had live coaching to help you with your performance ability, to help you with your analysis of the fundamentals. You have the ability to analyze past performance, like going through your old trade plans and learning your strengths and weaknesses. What if you were learning how to simulate, to build muscle memory, all of that? What if you had fundamentals and a research platform to do all your fundamental analysis? And what if you had a research platform to assist your technical analysis of 7,500 charts in real time so you can line up your fundamentals with your technicals? And because you have performance coaching and training videos, you know how to execute your thought process. And what if you got email alerts, both fundamentally and technically, to you every day, live? And what if this was $300 a month? Would you pay? That's it, $299. That's cheaper than if you bought all of that now. You're paying like more than $400 a month. So I'm going to drop it to $299. The thing is, what's more valuable to you, your time or your money? Okay, you wouldn't believe what it cost me to run all of this. Okay? So the thing is, what's more valuable to your time or your money? Can you make $300 a month with that type of knowledge and coaching and support, or not? Okay? Because Investor Bootcamp, $88 a year. Then if you want a day trading group, a swing trading group, it's $99 a month. If you want day trading, it's $199. Then if you want QuantBox, it's $79. Then if you want TradeRs, it's $79. Do you want the AI alerts? That's $20. Do you want the technical alerts, the daily open stuff? That's $20 a month. You add that up, it's a lot of money. Yeah. But if your time's not worth very much, look, maybe you live in Timbuktu and you're like, dude, there's no way. That's my monthly salary because, I live in Timbuktu. Then at least attend these live streams, write down the things that you find that I say that might actually be important. And then go do research, do some sort of online training at, I don't know if edX is still around, or Udemy, and do some, get an economics degree. Some of these will offer degrees. Get a degree, spend 5 years, spend 10 years, Your time's not worth very much, so invest your time. Now, if your time's worth a lot, then you got money and you're like, dude, I need help faster. Well, then invest your money. There's no shame one way or the other. It's just a consequence of where you are. And where you are might not have anything to do with who you are or how you think. The circumstance of you were born in a poor family in Timbuktu. You're like, oh my God. The rich family in Timbuktu has it so much better. Then to somebody else, you're like, the rich family in Timbuktu is poor. Whatever, it doesn't matter. Nobody cares. Right? The world is built on people that are worried about themselves and their loved ones and their family. Nobody cares about you except your mama and your papa. So it's more like, what are you going to do about the circumstances? Well, if you don't have any money, that's okay. I will help you. Now, I can't offer you traders or QuantBox because you can't build QuantBox for $1 million. So what are you going to do? Okay. Well, there are resources out there. These live streams are free and you can find stuff. It'll just take you a lot longer. That's okay. That's okay. Or I can get you a coach to help you every single day develop muscle memory in your technical analysis through coaching and simulation so that you can get better and better and better at your tactics. I can meet with you every day and help you with your fundamentals to set up all your strategies properly. You know, like, dude, and you're like, just those two things are a small part of what you'll get. And so it's like, you're like, oh my God, I have to have that. Cool. Well, it just takes money. And for most, I used to spend $300 a month on my charts. And you couldn't even trade on your charts. So to me, it's a pittance. But I understand $300 isn't zero. But it's not expensive. It's a real amount of money. But the value, I honestly believe the value is very significantly higher than that. Very significantly higher. Yeah. So it's value. But I understand it ain't chump change. But if you traded Forex when I started 25 years ago, it was a bare minimum requirement. You couldn't fund your Forex trading account with a credit card. You had to wire it. It was hard. So you'd open your trading account, but you didn't get any charts. So you'd subscribe to a charting service. That alone was $300 a month. The spread on the pound yen was 12 pips, bro. 12 pips. You're like, say what? Yeah. So, dude, trading Forex as a retail Forex trader 25 years ago, your monthly expense. Internet was expensive. Remember that? Your trading computer and multiple screens were expensive. Your charting was expensive. I paid, I think it was $150 a month for my Commitment to Traders report. Okay? 20 years ago, FX boot camp. You would meet with me 3 hours a day. Well, then I got some other coaches, right? So we had 3 hours a day. No, and it ended up being a lot more after, closer to 12 hours a day. But it was $300 a month. Yeah, that was it. So when you see the amount of value you're getting now, the value has gone up. And if you go back to like, how has FX Bootcamp, and then it became Investor Bootcamp, and now it's becoming Tradars with QuantBox. What has changed in 20 years? Think about this. In 20 years, what has changed? Not the price. It'll be $299 again. But what has happened to the value? It's like up 10x. 0% inflation in 20 years, but you get 10 times the value. That smells pretty good, huh? Smells like roses. Degenerate gambler, eh? Boom, shalakalaka, shock, right? Yeah. Every hand's winner, and every hand's a loser. Something, knowing what to throw away, and knowing what to keep. Yeah, all right. I love sleeping at night now, managing endowments. And I know no matter what happens, if the stock market goes up, the stock market goes down, that I will make 1% a month forever. You're like, that's not a lot. Yeah, you're right. Every 5 years, the money doubles. Yeah, you're right. I can sleep. I can rest. Degenerate gambler, I print money on behalf of charity. It happens. Just money comes in every month. Pa-ching. Oh, the stock market's down 4%. Oh, yeah, that's terrible. F you, where's my money? I get paid one way or the other, and it all goes to charity. Isn't that cool? Yeah, that's very cool. The thing about it is there's no gambling at all. The risk is so low, the way that the CIA has constructed this, it's so low, it's 90% less volatility than the S&P 500. Like 90% less, you're like, that. What the hell is that? There's almost no volatility at all. It's so low, it's ridiculous. Yeah, but I'm going to double my money every 5 years. And here's the thing. In the analysis of the portfolio's performance, the analysis indicates it'll perform even better in a down market, meaning it will lose money. I can't avoid that. I don't run the stock market. It's not my stock market. But if the market goes down, I will lose very significantly less money than everybody else. And I'll still get paid. So if I just sit on my pile of investments, in 5 years, what do you think? Will the stock market be up? Yeah, certainly. Sweet. So even if it's down the next 3-4 months, it doesn't matter to me. In 5 years, it'll be up. Oh, yeah, I'll make money. Meanwhile, I'm collecting cash every month, like collecting rent. Yeah. So the way I invest, it's like I buy an apartment building, and the value, the street value, the market value of the apartment building goes up and down with the moves in the real estate business. But it doesn't matter. I'm not going to sell. So I'm not going to lose any money. And just based on where we are in the cycle, in 5 years, the value of the property is like almost certainly going to be higher than it is now. Great. So in 5 years, if I choose to sell it, I'll have a profit. So it doesn't matter to me if I'm down a little bit this month or next month. Well, I know there's almost certainly going to be worth more in the future. So I'm like, I don't care. Doesn't bother me at all. Do I lose sleep? No. Meanwhile, I collect my rent every month. Cash. Holding it in my hand, cash paid. Not theoretical like, oh, well, your portfolio went up 10%. Yeah, well, that I can't eat that. I'd have to sell the position to get cash. Well, I don't want to sell. I want cash in my hand. So there's a difference between the theoretical value of the apartment building has gone up 10%, or it's gone down 10%. Well, I'd have to sell it to realize the gain or the loss. But I don't have any intention of selling it. But I collect rent. And what do the renters pay me? Cash. So every month I'm going to collect 1% cash. 12% a year. Okay? Which means, I don't know, I'd have to do the calculation. 5 or 6. Let's say 6. Every 6 years the account will double. And I can sleep all day. And I can party all night. I can totally ignore it. And I'm going to earn that money. Cool. Versus degenerate gambling, right? Why? Why? I don't think you even need that. Unless you don't have any money. Or you have so much money, it's stupid. Okay. So you're either broke or you're filthy, stinking rich. Yeah. And not many people are filthy, stinking rich. Yeah. So I don't think there's a need to gamble. So I'd rather you just know that QuantBox has scored this for weeks as a negative 10, which means you've known this fall. So if you didn't get filthy, stinking rich trading this, then you don't know what's going on. And no, you need to deal with that. So you subscribe to QuantBox and it tells you, and you know. Okay, that's one solution to not knowing. The next problem is, what if you knew and you still didn't do it? And what if you saw me draw this channel? Let's go to a 4-hour. Okay? What if you saw me draw this channel and draw this giant pink down arrow and you still didn't trade it? Well, now that's different. Now you're going to need some coaching and support and some time. It takes time to have experience. It takes time to build confidence. And listening to me will not give you confidence. You need the experience, and you need to analyze, and you need consistency. You can't just be random trading all over the place. This is why you need QuantBox and traders and a coach. Because over time, you need to consistently analyze and consistently execute, and then you see the consistent results, which means your control leads to consistency, and your consistency leads to confidence. Now, I wrote that in my book in 2007. Control leads to consistency. Consistency leads to confidence. Okay? So the knowledge has been out there, but are you paying attention? If I dropped a $100 bill at your feet, will you take the time to pick it up? Or will you argue with me whether that money is real? Oh, that's counterfeit. That's not real money. It's fake. Uh-huh. What are you going to do? Time, money. What's more important to you? What do you have more of? Where's your scarcity? It's an economic decision. Economics is a study of scarcity. You have the opportunity in front of you. You have the resources to trade like a sustainable institutional business that doesn't need to degenerately gamble. You have the facts and figures and the coaching and the knowledge, and you have everything there and the training. It's all there. What are you going to do? What are you going to invest to become consistent and confident and run your trading business sustainably? Are you going to invest time or money? The choice is up to you.